G is the screen. I just want to show the strategy. So this strategy is for using the previous month highs and previous month lows as major liquidities, and also as targets draw on liquidities again. They can work. Um, we can trade from those liquidity towards, and we can also trade towards them. So this is just a simple alignment of it. Talking about my strategy. So this is B10-1S. So as we can see here, I think it's for March. The back testing is for March. Back testing is from March. So as you can see, we have March, we have April here, we have March high, we have April. So from this March high, we had this one here. This one. This is March, you know. March, we have this one for March. So this was the trade for March. Symbol using the fair value gaps, interest candle, sponsored candle, and previous month high and previous month low, and also a bit of market structure. I think that's all we need on the synthetic indices. You can see this is April high. We have this is now another April, May. This is now May, right? We have a February gap here on May. We have, yeah, so this is May. We have on the 1st of May, the early days of May, we had a fair value gap, a bullish fair value gap, and we respected this fair value gap, but we failed to reach the April high. So now this fair value gap is now working as an inverse fair value gap. Also, we had another formation of a bearish fair value gap here, another formation of a bearish fair value gap here, indicating the down movement. And we're sticking into this fair value gap, and we say we have a rejection here. And that's when we use the power of 3 here from this green candlestick here. And this, we use the power of 3. We have manipulation, we have accumulation, manipulation, and distribution. So here is the manipulation. So we are expecting to enter from the 50% of this week from this candlestick. Targeting the April low. So using this strategy, you can find how that month is going to play the whole month, or on the first few days of the month. You can see the direction. So it will open a drawn liquidity. So you need to back test it. So this is May. This is May. We have March low as the target. We have our March low as the target. So here, staying into March low here, forming what? Forming here. This was May. Yeah, this was May low. May low is here. So May low was here, as you can see. May low was here. So we swept this May low, and here from this sweep, using the power of 3, we have this one here. We had our movement here, so we're expecting the move maybe to target April high. But as we can see, we were still in the downtrending market. So, and also we had all these imbalances were filled, all these were filled. So there's indicating a trend continuation. As we can see here we just took liquidity here, and see on the break of this, on the few days, you'll find before 15, maybe we can say 15, when it's latest, a range from the first day of the month, maybe to 15 latest. But even here, on the few days of the month, you have how it's gonna play. It's much easy. You can see here we have a sweep here. So we obviously know that we have to target this level. We were either to break this going upwards because we had a sweep of the monthly low. So here we didn't break it, but we took liquidity. And as we can see, we took liquidity from this and this one here. And this one, this was our swing low. And as you can see on this swing low, we broke this swing low going downside, and we have a sweep. Also, we had this order, our sponsored candle here. We had our sponsored candle here, this greenwash or the order block. The last buying candle before any impulsive move downsides. We sting into that, and we broke structure here, forming June low here. So as you can see, in the last days of the month, of the previous month, and on the first days of the month, you find the inside of the trade. You see how it's gonna work. You see, like simple is we have a feather gap here, and here we have a June low. We broke this low, indicating a trend continuation. It's just a simple strategy, guys. That's how it is. See here, same order block, feather gaps in this liquidity. So those are the main things: order blocks, fair value gaps, major liquidities, which is previous month high and previous month lows, and the market structure. That's why all we use for synthetic indices. So this is just a strategy. I was just cooking. So let me show you on the, maybe this is V10 1S. Let me show you on V10. V10. Yes. V10, we're the same. Oh, this is a trade. This is ongoing. We're still into this fair value gap, and we are targeting this primary inducement, and also we are targeting a reaction from this fair value gap, or EV to go to meet the 2024 low here in June. So just imagine you have an insight of a trade here, and you see, you know, we are supposed to get here to this previous month or this primary adjustment. This is December low. So those are major liquidities. And here it's definite that we are going to reach this year. It's definite. You see, so you make your day trading much simple because you have the main drawn liquidity. So this is it, guys. This is the simple strategy. Cooking, making use of sponsored candle, interest candles. Sponsored candle is just an order block. They are all order blocks. Sponsored candle, interest candle, they are all order blocks, but different types of order blocks. Breaker blocks, no, I don't use breaker blocks, but yeah, to me they work, but for me I find something, breaker blocks, I use fair value gaps, yeah, and those, the main swing lines, which are the major liquidities, are the previous month highs and the previous month lows. So it's much simpler, guys. So those previous month highs and previous month lows, we trade towards them or we trade from them usually. If you are trading from a fair value gap or maybe from a breaker blow, an order blow, sponsored candle, interest candle, we will be targeting the external liquidity, which is the monthly highs or the monthly lows. So we trade from internal liquidity, internal range liquidity to external range liquidity. When we say internal range liquidity, let's say for example here, fair value gaps are internal range liquidities to trading towards the external range liquidities. So the external range liquidities, these are the monthly highs, and the monthly lows. So you see, it's simple, guys. Market structure, fair value gaps, order blocks, and fair value gaps. So that's it, guys. It's quite simple. This one is simple. So this was V10, right? This was V10, V10. This was volatility 10 index. I showed you for volatility to turn 1S. So it will be easy when you go to lower time frames. You see, this is the daily time frame. Also, we have the V25. Let me check on V25. V25. Yeah, we have V25 on S also. So yeah, checking on this V25 on S here. So we have this January high, February high. So guys, this it's simple. Maybe if you like to know more about this, I'll just be dropping few things, few free videos to show you. But you need patience, guys. You have patience. Yeah, patience is the key, and also takes a lot of time to wait for this trade. That's why I'm saying like I get an insight from this monthly. So meaning if I have an insight for the whole month, I can trade those all days between the month, like and also I can be able to catch these impulsive moves. Let's say for example here we have an insight here on the end of the month, we got trading is likely to do this, go down here. We have April here, we have many lows here, we have many targets here, we have April low here. See, so only that you only need a confirmation for each. Maybe you go to lower time frames here. When we broke this June low, it was easily indicating, guys. You can see, guys, it's much deep easier. So only you need patience, guys. So you also have V25, right? See, it's the same, guys. It's the same. It's the same. You see, this one here, this was a week. This was a week. And that's why this kind of this February was extremely bullish. What you see, guys, when you don't find how the higher time frames, or here we are dealing with the whole things. We are dealing about the monthly. We have the monthly here, the monthly candle. We have it here. Both this one, yes, from 1 December to 1 January. This is 1 month. This is the monthly candle, guys. So it's easy to see that. As you can see, this you have an impulsive move here, an impulsive move down here. The candle opened here and it closed here, and this one, it's a week, and that's why we had this downward movement. And you see, on the end of January, on February, we went back into this favor gap, indicating that. So guys, this is simple. Go on December here. When you look in November, this is the month of November, the candle of November, and this is the start of what? The start of December here, guys. So we have these days, on this day, yeah, 15. As I was telling you guys, 15 latest, guys. As you can see, we took out liquidity here. After taking out liquidity, we have this fair value gap here. We had this fair value gap, we had this bearish fair value gap, and having this bearish fair value gap, price is sticking to this fair value gap, and here we came here to this. We didn't break, we swept liquidity. We swept liquidity here. We swept liquidity here. And also this one here, our candle, this green candle here, it's swept liquidity, and it's our sponsored candle. What's a sponsored candle? A sponsored candle is a candle which took out liquidity before an impulsive move. That's a sponsored candle. So for me, a sponsored candle, you can see for the rest of the month of January, we are likely to go up. And we even see from here, we even continue to taking these highs. This is July, right? We're taking these highs, July high. Yeah, taking these highs, guys. And we reject, and we had a big rejection from the monthly candle. This one is a monthly rejection. You can see this one is a strong rejection. So that for me, I'm anticipating a bearish market, maybe up to this one here, 2024 low. I'm expecting a strong bearish movement up to when we reach the lowest of last year. I don't know where is it, because the whole of last year, I think it was a consolidation the whole of last year. So after having this rejection here on the monthly rejection, I'm expecting a very powerful bearish momentum. That was it, guys, for the strategy. So you don't need much, you only need to have to go on the daily time frame or the 24-hour time frame, mark the first day of each month with vertical lines. It's horizontal, yeah, with the horizontal lines indicating the monthly candle so that you can see how that month went. You can see the formation of the candlestick of that month. And also you have to mark the previous month highs, the monthly highs and the monthly lows so that you can see if there is a liquidity run or a liquidity sweep, which is also, we can simply call it the engulfing bar or the power of three. It's only in the same, yeah, it's different, but for me, I can just take it the same because they work the same way and they bring out the same results. So that's it, guys. See you next time.